Nike stock is trending down 10.07%. This is Friday, the 19th of December, 2025. Pre-market session, intraday low $58.20. Let's see whether we can get the sentiment behind this huge. Well, for a stock like Nike, that's a huge plunge. 10% is looks like a lot.
Nike is trending after releasing its Q2 earnings, delivering what looks like a headline win, but triggering a sell off that's reignited debate about the company's longer term growth story. On paper, Nike posted a double beat, topping both revenue and EPS expectations, signaling that cost controls and demand in certain regions remain intact. However, the market quickly looked past the beat and zeroed in on the areas that continue to deteriorate beneath the surface, most notably China. Greater China revenue plunged 17% year over year, sharply worse than last quarter's 9% decline. For many investors, this was the most alarming data point in the report. China has historically been one of Nike's most important growth engines, and the accelerating slowdown is being interpreted as a warning sign that macro weakness, rising local competition, and shifting consumer preferences may be having a more lasting impact than previously hoped. Adding to the concern, Converse sales collapsed 30%, intensifying questions around brand relevance and momentum outside of Nike's core footwear business. The steep drop suggests that the company's portfolio diversification is under pressure and that Converse may be losing traction in a crowded, fashion driven market. While North America and EMEA showed relative strength, helping Nike beat estimates, investors largely viewed this as insufficient to counterbalance the scale of the Asia weakness, particularly given China's strategic importance to long term growth and margin expansion. As a result, the stock's decline following a seemingly strong earnings report has split the community. Bulls argue the sell off is an overreaction, pointing to the earnings beat, improving execution, and the possibility that China represents a cyclical, not structural slowdown. Bears counter that the market is correctly pricing in risk, emphasizing that accelerating declines in China and Converse suggest deeper brand and competitive challenges. Now, attention is firmly shifting to forward guidance and management's turnaround roadmap. Investors are looking for clearer signals on how Nike plans to reignite growth in China, defend market share against aggressive competitors, and stabilize its brand portfolio. Because without that clarity, even strong quarterly beats may continue to be met with skepticism rather than relief.
Okay, so this is the 4-hour chart, which has reflected that 10% plunge. Lower prices are expected to keep printing all the way towards the all the way towards the pre-market session of Monday the 22nd, and after that, rather from then, it might just consolidate. But the rebound is expected to begin to kick in from the next day, the 23rd. The 40 period moving average is also expected to continue to decline to prevent any attempt to bounce. Okay, we don't exactly know whether it's going to recover or not. Okay, as things stand right now, we have a couple of projections. Let's see what we have. We'll mix them up with what we'll get from its market grid. So right now we have 63.18. It's a pivotal projection. If it closes above that, then maybe you might say that the recovery has kicked in, or rather, there's the probability of it going to test 64.07 improves, and also towards 65.44. So the projections right now are just 63.8, 63.18, but a couple of hours ago, it included 64.04, 65.4, 65.45. As of Wednesday, the 17th, it also included 72.86, 75.21, 76.67. I think those were in anticipation of something positive with regard to its earnings outcomes. But I think they were well. where some just have the China issues. It's is a disappointing element of the whole disclosure. So as things stand right now, let's see now what we have. We have a couple of extrapolations. We have a couple of forecasts. Yeah, the 3 day moving average is saying 63.556, 65.9005. So those are projections to watch. Those are projections to watch. But at the same time, we still have lower prices that could still print 57.47. Okay, let's just quickly apply the market grid to get. But before we do that, let's see now how whether the selling pressure has worsened or has abated. Let's see now. Yeah, selling pressure has increased tremendously. Has increased. Yeah, pace has okay. Selling the it's severely bearish now, but the selling pressure has worsened, but the pace has decreased. So they are gradually reducing their pace. They are gradually reducing their pace. They might redeem their strategy. Yeah, let's see now. Let's have a look at the market grid. It will give us a range of prices the stock has the potential to trade within. Okay, no, this has not reacted. It's still trading at a huge premium to the grid. Let's have a look at the 1 hour charts. Yeah, okay. We have a range here. Okay, we have between 61.74 and 55.70. Yeah, you can see what I mean. It's currently at 58.57, so it could still go ahead and 58.57 and test 58.01, 57.21, and who knows, even 55.70. So, yeah, low prices are still possible, but the range is there as well. The range is there. It has, we can see a couple of you can see a lot of this is the grid stops at 61.74, but there are a lot of other projections there. So let's just see the daily chart. We have here 55.70. Let's see where that corresponds on the 4 hour chart. We saw a downward projection there. Where we have this here 55.7. Yeah, you can see a 50. This is 57.34. Okay, they're not as low as 55.70. So it may well at some point it might be a buying, it might provide a buying opportunity. It might, but for now they are still digesting it. I think lower prices may still continue to print. Yeah. The algos got this right. It was saying that it was going to be down today. So this chart has not reacted to what is going on right now, and it was indeed saying that lower prices was going to print today. So this is spot on. But this is not correct. It has changed now, this market grid, because the market has not opened. You probably have to get yeah, yeah, you can see here it's saying that it was going to be down today, the 20. Yeah, it was going to be down today, the 19th, and then it's saying that it might continue to weaken all the way towards the 24th, Wednesday the 24th. Then after that, maybe we might begin to pick up from Boxing Day. Okay, no guarantee that this will be the case at all. Yeah, no guarantee at all that will be the case, that this will be the case. But people will be considering what they're going to do with the stock, given what is going on, what has happened now. Yeah. So before now, as a matter of fact, it picked up a bounce as of the 11th of November. Yeah. So in a very short time, in a very short time, it's in a bullish trend. Yeah, very short time, it's in a bullish trend. Yeah. Okay, let's see how all of these things will pan out. And thank you very much for watching this video.